What is up, degenerates? It is Thursday. The market just closed. We are going to talk about the bloodbath again that we saw in the market today, and we're going to talk about some good news. First, let's do some declarations that were today. Income Blast from Tuttle Capital. They only have two funds. I expect more to come out. BITK, which I do own. They do covered calls on IBIT, 0 DTE on IBIT. They were down 2.22. IBIT was down 2.82, so they fared better. MSTK, which is on strategy. Strategy's a train wreck. Still got to call it MicroStrategy. Change the ticker if you don't want me to call it MicroStrategy. Anyway, MSTK was down 5.78. MicroStrategy was down 6.98, so they only captured about 80% of the loss on their underlyings. So whenever you say just buy the underlying, you'll do better. Not necessarily, because you're getting dividends too. Distributions, not technically dividends. But anyway, BITK, the last three are 15 cents, 18 cents, 18 cents. That is a 43% yield. MSTK has only paid twice, 50 cents, 50 cents, consistent. That is a 123% yield. So that's degenerate. I don't own it yet, but that's why I track them all, because I want one to pop up, and then I'll buy it. Pop up in distributions, that is. If the price goes down, the yield will go up. What else we got? Roundhill declared Maggie, which trades Mag 7 basically. The Roundhill Mag 7 fund is Mags, and Maggie was down 1.88. Mags was down 2.13, so again, better than the underlying. They paid 36 cents, 37 cents, and today they declared 37 cents, so pretty stable, 33% yield. What else we got? Ignore everything under here. I didn't update these prices because I wasn't going to talk about them. Defiance, they declared QLDY. That's their lightning spread on the NASDAQ. QLDY was down 1.65. NASDAQ was down 1.91, so they did better than the underlying. They pay twice a week. So the last three have been 19 cents, 19 cents, 19 cents. Pretty consistent. That's a 41% yield. They declare Tuesday, Wednesday, and Thursday, and then their paydays are Thursday, Friday, and Monday. So a little confusing, but a lot of people like it. I know Max Convexity likes it. Yieldboost, what everyone's waiting for. Bunch of funds, couple of new ones. They've been trading a couple days, and they already are paying a distro. One is huge. So let's just start from the top. COYY. These all trade on a double leverage underlying fund. So COYY is based on a double leverage Coinbase, CONL. And were they up? Did I not update that? Let's check that. I don't think they were up. No, they were down 2.4. Down 2.4, and it automatically. But the underlying was down 15%. So Yieldboost, it's capped on the upside. They do just put credit spreads. The premium is the income. No upside after that. But a protective put protects the downside. When something goes down 15%, they're only capturing 2 of that, 2.4. HOYY, which is a Robinhood based fund, down 6%. Underlying was down 22%. So again, in a big red day like this, you like Yieldboost. They're down, but not nearly the capture of the underlying. TSYY down 2.46. Underlying TSLL down 6.89. SMYY was up, and I did double check this. I can show you again on the chart. SMYY. They had a big gap down yesterday. and they were up today. Up. It says 0.58. Did I have that? Yeah, 0.58. Underlying was down 8%, so good stuff there. AMYY, which is an AMD-based fund, down 5.6. AMDL down 14. XBTY, which is a Bitcoin, down 1.8. BitX was down 5.71. So you see the trend here. NVYY was down, which is NVIDIA based, double leverage, down 3.25. NVDL was down 7.28. POIY Palantir base down 2%. The double leverage Palantir was down 13%. The only one that was up was a Babo fund. BABX is the double leverage. They were up 3%. And BBYY for Yieldboost was up 2%, 2.07. So they captured 62% of that upside. Not bad. Hey, if it's green, we're happy today. Let's see. MTYY, which is a strategy base, was down 3.81. Underlying was down 13. TQQY on the Qs, down 4.54. Underlying was down 5.64. iSpy down 3.41. That's on the SPY, the S&P, down 3.41. The underlying was down 3.27. So they actually did lose a little bit more than the underlying on that one. AZYY, which is Amazon based, down 1.1. Underlying was down 5.81. FBYY, which is a Meta or Facebook, was down 2.95. The underlying was down 5.38. MAAY, which is a Mara, brand new funds, trading a couple of days. They already paid a distro, or declared a distro. I'll go over the distros in a minute. You're going to be shocked at a couple of these. Let's see. They were down 3.99. Underlying was down 13.26. IOYY, based on IonQ. IonQ is up 7.49%. IOYY up 3.18. So they only captured 42% of that gain. But again, look at all the red and look at the lesser red, on a day like this. So let's talk about the declarations. COYY is still the winner as far as yield. I averaged the last three with the current price. They paid 38 cents, 40 cents. Today they declared 37 cents. These are all payable Tuesday. That is a 159% yield. HOYY paid 60 cents, now 58, 145% yield. TSYY, 20 cents, they're 20 cents, 20, 138%. That's my biggest holding, as you guys know. I love TSYY. It's down from where I bought it, but it's way outpaid what I paid for it, if that makes sense. Total return is up. These are long-term holds. I do drip them now. The numbers work better for me. You don't have to. But, again, I'm loving it. SMYY, 64 cents, 61 cents, 56 cents. That's trending down a little. Still 147%. AMYY, 48 cents, 49 cents, 102% yield. XBTY, 30 cents, 28 cents, 105%. NVYY, a lot of people's favorite fund. I do own this one as well. 44 cents, 43 cents, 99% yield. PLYY, 44 cents, 47 cents, 43 cents. Again, these are all weekly. 101% yield. BBYY on Babo, actually the BABX is the double average. 46, 47, 43 cents. That's 100% yield. MTYY on strategy, 30 double average strategy, 35, 33, 29 cents. That is a 116% yield. TQQY, 18 cents, 27 cents. Big raise there. 59% yield. YSPY, which is on the S&P, 18 cents, 19 cents, 18 cents. Pretty consistent. 49% yield. AZYY, Amazon based, 22 cents, 22 cents, 23 cents, 48% yield. That's the worst one of Yieldboost. And I don't mean that in a bad way. I mean, that's great. Amazon, a much more stable company. So the volatility is much lower. So you're not going to get, 100% yields off this one. But that's solid. FBYY, meta-based, 23 cents, 24 cents, 22 cents, 54% yield. MAAY. I'm used to saying double Y's there, but it's MAAY. It's Mara, double leverage fund is the base. And yeah, let's look. Okay. I want to show the chart just to show you it's like so brand new. MAAY. There it is. 3 days it's been trading. It's down, and it looks it was down 3.99% today. Launched at about 24.84 was the open, and 23.54. So it's down $1.30. But again, red day. But look what they're paying. 67 cents, 150% yield. IOYY, brand new. Let me show you that one. They launched the same day. 3 days ago. Up. I don't know what happened with IonQ. Did they have news today? Let's look at that real quick. Earnings must have been good. No. Surprise down. Revenue was a surprise up. 47%. That's probably what did it. And then today, the revenue hit up 222% year over year on revenue, exceeding expectations. The company reported a smaller loss, leading to a nearly 4% stock increase. Quantum stocks were blah, 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 blah. Okay. So and they were up 3.65. So they made their first declaration today, will be paid on Tuesday. X date is tomorrow, Friday. 70 cents on a $25 ETF. 145% yield. Crazy. So, as a whole, they are 107% if you own, all of the Yieldboost funds. That's what you're yielding as a whole. So, a lot of people are talking about, I want a fund of funds from Yieldboost, and that's coming. But you can make your own, I own 3 of them. COYY, TSYY, and VYY. Not opposed to owning more. We'll see. So that's Yieldboost. I want to talk about reverse splits because there's a lot of confusion. I asked Grok because Yieldmax did a reverse split with Tesla back in February of 24, so almost 2 years ago. And what happened? They announced it February 13th. Effective date was February 26th. So you had time if you wanted to rearrange some things. It was 1 for 2. What does it mean? If you own 200 shares at $8 before, after the split, you only own 100 shares, but they're worth $16. Your value is $1,600 both ways, before and after. You have less shares, but double the price. Your monthly dividends went from 80 cents a share, which is $160 a month, to $1.60 a share. It doubled to $160. So nothing changed. And let's see, your total money and percent yield are 100% unchanged. Only the share count and price doubled. No, the share count was cut in half. Price doubled. At the time, share price was at 8, getting close to penny, and which is frowned upon, if you get below $5, and you get delisted if it's below $1. And that's discretionary, based on the exchange, but it was cosmetic. $1.60. Back then it was monthly. Now it's weekly. $1.60 a month looks better than 80 cents a month. Even though it's a psychological reset, stops the death spiral optics. What it doesn't fix: NAV erosion from covered call drag, Tesla volatility crushing the fund, and future decay. So what happens in your brokerage? Your cost basis doubles. Fractional shares cashed out. Yeah, if you have fractional shares, I think it's just they're closed. So I think that was a 37-cent. It just went cash into your account. You didn't get fractional shares after the split. Bottom line, the reverse split was cosmetic housekeeping, not a death sentence. If you like Tesla at 8, you still like it at 16. If you hated the decay, nothing changed. You keep collecting the fat checks to rotate to YMAX or Misty. Misty may reverse split as well. ULTI may reverse split. Murney could reverse split. It doesn't matter to me because nothing changes. I mean, if if it happens, you see what if anything is going to change. You can move money out if you want, and some people will. But when a company, a regular company does a reverse split, it's usually bad for the company. It means they're not, their share price is dropping because the company is suffering. These are option strategies, income strategies. It doesn't reflect the health of YieldMax or of any of them. So anyway, I want to talk about that because I wanted to look at ULTI. Yeah. So I bought ULTI March 3rd. It's launched way before that. End date is 11/5. I didn't put in today yet. Back then it was, and I didn't put in 10,000. This is an example. Price per share was $7.38 when I bought in. I have been dripping it, so my average is $6, I think. Still underwater, but you start with 1,300 shares if you put in 10 grand. Now you have 2,500 shares. You've earned $387 and reinvested them. This is a reinvest scenario up top here. Let me blow that up. It doesn't blow up much. So your total return is 21%. Annualized 32% because it hasn't been a year yet for me. I didn't put in 10,000, but this assumes 10,000. Now you have 12,000. If you reinvested, that's your ending investment. If you didn't reinvest the dividends, and I didn't drip the entire time. I dripped when I first bought it. I stopped dripping and put money into other funds, the distributions, and then I turned drip back on, I don't know, a few weeks ago. Because the numbers look better to me. But that's, everyone's own decision. There's no wrong way to do this. But the only wrong way is to buy it. It's at 4 something now. You bought it at 5, now it's down to 4 something. You sell it. You haven't collected much of a distribution. You've lost money. Warren Buffett says never lose money. That's rule number 1. And you only lose when you sell. Now, if you think it's going to 0, then get out. Stop complaining about it. Get out. I have no problem with it. So in this scenario, without reinvesting, still $7.38 starting price. It's worth $4.70 as of yesterday. You still collected $387 in distros. Total return 16%. Annualized 23%. So it's less than if you reinvested them. Your 10,000 is now 11.6. My 10,000 is now 12.1. So when I saw this on this site is what's it called? Dividend Channel. Go to later. It's totally free. There's no sign up or, they probably have one, but you put in your symbol, you put when you started it, you put in defaults to today's date, and you just click it. You have to put 10,000 invested, but then you can get an idea. You can put in anything. Let's look at Misty. People hate on Misty. Start date January 1st, 1995. Obviously, it started way after that, but that's what it defaults to, which is fine. Look at Misty. It's green. Way green. If you dripped, your total return's 171%. If you didn't, it's 156%. So, again, if you hate Misty, sell it. I'm not. So we talked about the reverse split, and it might come with ULTI. I do want to compare. I did a little watch list here of ULTI. It's down 3.4% today. But everyone's saying I'm moving money out of ULTI. I'm going into ULTI or WPAY, which is fine. I think those are going to be great funds too. But ULTI was down 6%, over almost 7%. WPAY was down 4.27%. So ULTI wins the day. ULTI will do better than the others in a down market. And today was down. In an up market, the others will do better. It's just, that's why we don't just put all our money into one fund and pray. We diversify. I now own 19 of these, and I'm real happy with what it's doing. Anyway, that's all I got today. Make sure you hit the like. Give me a comment. I love the comments, positive or negative. I do have a couple of haters now that will comment. I welcome it. I'll like the comment. That's fine. This is what I do, and I know a lot of you kind of do similar stuff, and let's just build this together. Just wanted to share that all with you, and have a great day. We will talk to you tomorrow.